Ahead of its meeting in Davos, the World Economic Forum, together with Swiss Re, released its annual Global Risks Report for 2010 today. Now, the report issues the key risks that the world will be facing in the coming year. Well, Raj Singh, the Chief Risk Officer at Swiss Re, is here with me to discuss the report's finding. Raj, thank you for coming in the studio. Now, it's a very interesting report. Essentially, it says that because we're so interconnected now, it's far more difficult to contain risks, so that everything has to change in terms of governance between also the various countries, possibly the various sectors, but nothing really surprising there.
There's nothing really surprising, and if you look at this is our fifth version of this report, and the main thing we're coming out of this report is the overall interconnectedness, and that really is a big issue. And if you look at it, the interconnectedness primarily in the area of the fiscal crisis itself, and then looking at interconnectedness in other areas like infrastructure spending, agriculture, and a number of other areas that are also key risks.
Which is why exactly a year ago, almost, the central banks had to work together in concerted action to deal with this. But has it gotten worse in the last year or so? I mean, this report highlights what went wrong in the financial crisis.
Sure. What we're looking at is the risks for the next year, for the coming year. If you look at the fiscal crisis itself, there are many side effects that are coming through. Number one, governments have had to go in and raise a lot more money, putting pressure on interest rates. So there's interconnectivity with the rates itself. Then on top of that, also, there's a huge demand for other projects like infrastructure and climate change type adaptation efforts that need to be also put in there.
Higher interconnection, so it means that basically we have to approach everything more systematically to try and contain this risk.
Absolutely. A lot more coordination and looking at the global governance gaps and trying to figure out how do we do this jointly. If you look at it, there was some very positive moves in the last year in terms of the central bank actions, but a lot broader interaction is necessary.
What do you make of, Raj, what we heard from Basel and the BIS, saying that actually there's a lot more risk out there, that the banks are putting more risk out there without actually almost realizing?
I would say definitely the risk is still out there, but it's not without realizing. Definitely we understand the risks out there, but in terms of the governments themselves, the continuous pumping of money and the exit strategies also will matter.
Now, while sudden shocks, you say in this report, have a huge impact, the biggest risks, again, are these slow failures. Do we see entities getting back to their old tricks? Because there has been some regulation over the past year and a half.
Sure. I think there will be a lot more oversight and tighter oversight, but I think that also we talk about creeping risks, which are not just the fiscal risks. Mm-hmm. Creeping risks are things like aging infrastructure, need for investment in agriculture, the need to feed the people. For example, by 2050, there'll be 9.1 billion people in the world. We need to increase food production by 70%. Now, if you look at that, if we don't make investments now, what's going to really happen in the future? Because we're generally looking at the longer-term risks here.
Climate change, did this come up in your report as well?
In our climate change is absolutely there. The issue is the fight for funds, and how should we allocate funds for climate adaptation.
And the third point that's essential to make is this global governance gaps, so that you were saying this interconnectedness basically means that people have to work together.
Absolutely, we have to work together. And Copenhagen, of course, was not the best example of that. We didn't get the results that we would have liked to have seen, but there needs to be a lot more coordination on these single global risks, whether they come from the fiscal side or even agriculture, food, and these other areas.
Anything in terms of asset bubbles, or is this more short term? You're really looking at 10 years down the line, 10, 15 years.
We keep that view, but the asset bubble, still we continue to maintain that from our consistent report from the last 2 years. So the asset bubble is still an issue. When you look at the asset bubble in terms of just specific things in the U.S., you look at credit cards still, and credit cards, the models out there are set up for 6.5% unemployment rates. That was the base model scenarios. We already have 10% there. So are we really going to have further asset bubbles in those kind of areas?
Raj, we only have 20 seconds left, but has this crisis actually accentuated the risks that you're talking in this report? Because governments, instead of looking at infrastructure, need to plug their holes in their deficit gap.
Yes, I think it does accentuate the overall situation, but the main thing is to really work on a coordinated basis on these governance gaps.
Raj, thank you so much for being with us there.